Hey guys, welcome back to a brand new video. I'm RexFinance, and today one of the most popular retail-owned stocks out there reported earnings. You probably know who I'm talking about. Palantir reported earnings, and they are breaking the stock market. Initially, after these earnings were released, the stock dropped about 10%, but now all of a sudden, the stock's up almost 2% after hours. So we're on a roller coaster right now, and I'm going to dive into why I think that is. Just a quick disclaimer, I am a very small shareholder of Palantir stock. This is not financial advice, but if you guys are new here or returning and not yet subscribed, I'll greatly appreciating that subscribe button. I'm guessing there's going to be a lot of new viewers because I've never talked about Palantir on this channel before. So far this year, Palantir is up 181%. Partly because the stock was very undervalued and also partly because of this AI craze that has been going on. And something that I've always said on my YouTube channel is I think we're going to dramatically overestimate the impact of AI over the short term, but dramatically underestimate the power of AI over the long term. And if you invest in Palantir, this is one of the best pure play AI companies you can invest in, so the hype around this stock is legit. You also have the fact that a very successful businessman named Peter Thiel was a founder of this company. Basically, every company that this guy has touched has succeeded in a very big way for shareholders over the long term, and personally, I don't think Palantir is going to be any different. But today, the company came out with their third straight quarter of positive net income, this time reporting a positive net income of $28 million. They had adjusted earnings per share of 5 cents, which is what the estimate was. They had 13% revenue growth year over year to $533 million during the quarter. The estimate was $532 million, so basically a match, but a slight beat here. Their biggest beat of the day actually came from adjusted EBITDA, which came in at $143 million, which beat the estimate of $130 million, so that's quite a beat there. And then they announced their new outlook for quarter 3 as well as the full year 2023. For Q3, they see revenue between $553 to $557 million, which is basically in line with Wall Street expectations. They see adjusted income from operations of $135 to $139 million. And for the full year 2023, they actually raised their revenue guidance to over $2.21 billion. That is a lot of revenue. And they also raised their adjusted income from operations guidance to over $576 million. And then the real kicker here is that the board of directors authorized a stock repurchase program of up to $1 billion. There's a lot of investors out there wondering, okay, where was this, half a year ago or a year ago? Why now? Why are we repurchasing shares now? But regardless, a $1 billion repurchase program should be a positive catalyst for the stock. But I actually believe this is why Palantir's stock price has been so volatile after hours, and I will explain to you why that is. First off, basically all of these numbers came in line with expectations. Wall Street basically said that this was a earnings report. There's nothing special here, nothing really disappointing. It was just kind of in line with what people thought, which is kind of surprising because anywhere you looked, people were expecting a 10 to 20% move to the upside or the downside, which could still end up happening after the earnings call. But as of now, the stock price movement after hours has been relatively muted. As I'm recording this video, the stock price movement is even more flat than before, only up 0.39%. And you guys might be surprised by that. A $1 billion repurchase program, and also their AIP platform already has more than 100 organizations signed on, users active using this platform today. And a lot of people view this artificial intelligence platform, or AIP, as the inflection point of the company. They view the AIP as what's going to drive the revenue growth for years and years and years to come for Palantir. So the fact that they already have more than 100 organizations using this platform should be viewed as a very, very positive signal. They even say they are currently in discussions with more than 300 additional enterprises to deploy AIP within their organizations. So if you believe in the AIP, the future of the company looks very, very bright. But I think the management team here may have spooked the markets a little bit with this $1 billion share repurchase program. A lot of the time when high growth companies authorize a share repurchase program, Wall Street gets spooked because it signals to Wall Street that maybe the management team doesn't think they have the best investment opportunities or not as good investment opportunities as they they thought they previously had. Because when you repurchase stock, you are taking your short-term investments, you're taking your cash, and you're purchasing stock on the open markets rather than deploying that cash back into the business to grow the business. So initially, this actually can be a negative signal to the markets because at this stage of Palantir's growth, we really want to see them redeploying as much cash as they can into their business to sign on new customers, to support those customers, and to grow their overall business. This $1 billion repurchase program is $1 billion of cash potentially that will be used to repurchase stock rather than to grow the business. However, it is very important to note just because they authorize this repurchase program doesn't mean they actually have to follow through with it. They just have the opportunity to do so if they would like to. Now, most of the time, if you do authorize a repurchase program, you're going to use it, but investors are questioning this after the company's up 180% year to date. Why now rather than earlier in the year? And a lot of that decision making for now rather than earlier could be just the management team's wishes to signal to Wall Street that they're not going anywhere, to put together several positive net income quarters, which now they've done. And after they've done so, they've decided it's safe to authorize this repurchase program because they're not cash flow negative anymore. They've strung together several quarters of profitability, and a share repurchase program makes a lot more sense if you're profitable for a longer amount of time. So in my opinion, the management team just wanted to signal to the markets that we didn't have a fluke quarter when we first reported net income, that this is going to continue. We're going to be net income positive for quarter after quarter after quarter and year after year after year from this point going forward. I also believe that some of the thinking behind this has to do with the way Palantir went public. If you remember, they did not IPO, they did a direct public offering rather than an initial public offering. And I could get into the weeds of the differences between the two, but all in all, for the sake of this video, all you need to know about the direct public offering is that it creates much more stock-based compensation in the company's financials than an initial public offering generally does. If you look at Palantir's insider trading, you'll see all these non-open market acquisitions as well as automatic sells, and this is the management team and board of directors cashing in some of their investment into Palantir. And this has been a major talking point for both Palantir investors as well as Palantir naysayers. They point out this excessive stock-based compensation, but a lot of this does have to do with the fact the company DPO'd rather than IPO'd. But if you do just a quick Google search of Palantir stock-based compensation, there's article after article why Palantir has massive stock-based compensation. Stock-based compensation too rich. Is stock-based compensation hurting Palantir? Palantir's punishing shareholders with this regular stock-based compensation. When will Palantir's stock-based compensation ease? In fact, for last quarter's 10Q, Palantir mentioned the term stock-based compensation 58 times. In my opinion, this $1 billion stock repurchase program is probably intended to offset some of this stock-based compensation, because whenever you have stock-based compensation, you're diluting shareholders, especially when the management team and the board of directors is exercising their options that they received when they went public, which is what a lot of this insider trading is. That is creating dilution, and it's also creating somewhat of a ceiling on the ask side of the bid-ask spread. This $1 billion share repurchase program should offset any of this dilution or pressure on the ask side of the equation. So in my opinion, what do I think about this earnings report? What do I think about this share repurchase program? Well, I agree with Wall Street. I agree with all of you. This was a quarter that was in line with expectations, and usually in line with expectations in today's climate is a good thing. I don't see the stock moving 10 to 20% like people initially thought off of this, just because there were no big surprises, which again is probably a good thing. I'd rather have no big surprises than a huge negative surprise. Over the long term, I still view Palantir as a great investment opportunity. Do I think this share repurchase program could have been timed better? Yeah, absolutely. But again, I think a lot of that had to do with the management team wanting to string together multiple quarters of positive net income before authorizing this share repurchase. And yeah, maybe the markets will initially view this as a negative signal that the management team doesn't see better opportunities for their cash to grow their business internally, so they're choosing to repurchase shares instead. But over the long term, I expect this $1 billion share repurchase program to be a very positive catalyst for shareholders and investors in this company. I believe that when I sit in this chair in the year 2030, all investors in Palantir will have made a lot of money. But with that, please comment down below your thoughts on this quarter. And if you're new here or returning and not yet subscribed, please subscribe below. I greatly appreciate it. Have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.